Hey everyone, Jeff Dorman here, Chief Investment Officer at ARCA, back again for the weekly edition of That's Our Two Satoshis Live, where we talk about everything going on in the crypto markets. Unfortunately, Thomas Brazil, who was going to join me, had to cancel last second here. We'll get him on again at another time to talk about what's happening with crypto bankruptcies. But we'll still continue here, just myself, and talk about what is happening in the markets. As always, this is not investment advice. But we are going to talk about what's happening in markets. For those who prefer to read it, you can always go to our blog, ar.ca/blog, and read the written piece. That's our two Satoshis. This week, honestly, not a ton of new information week over week, but obviously still coming off the heels of a pretty important last few weeks. May will go down as, in my opinion, probably the most important month in history for the digital asset market, at least pertaining to specifically the capital markets and price action, given the about face in Washington and all the regulatory actions that came about. One of the things we talked about this week, though, is even myself, I wrote about it last week as well. I talked about how important this was and how it's great that the Republicans were putting pressure on Democrats, and ultimately it started to become more of a nonpartisan issue in Washington. I just want to be, caution though, with regard to getting too far into this bipartisan. Are you pro-Trump or are you pro-Biden? Are you pro-Democrat or Republican as it pertains specifically to crypto? I think what's important here is that ultimately Washington has been woken up to just how important this is and how many Americans specifically, but really across the world, people just care about crypto. In fact, I saw a great tweet this morning from Anthony Scaramucci of Skybridge Capital saying that almost 90 million people in the United States own crypto. Only about 55 million own a dog. And imagine having a campaign where you were anti-dog. You'd get crucified. It wouldn't work. You'd gain zero votes for being anti-dog, but you would certainly lose a ton for being anti-dog. And I think crypto is now shaping up to do the same thing, where it just makes absolutely no political sense to be anti-crypto. There's just not enough people who actually care enough about crypto to hate it versus the tens, if not hundreds of millions of people who actually like it. So I think that's the real takeaway here. I wouldn't get too partisan here, with regard to which party is really pro or against crypto. I think it's more just about let's make sure everybody in Washington recognizes the importance of crypto. If we get too far into the partisan politics, then all of a sudden you might actually start creating enemies. I would say right now that crypto doesn't have any enemies, outside of a few, nut houses like Nouriel Roubini or Jamie Dimon, who, tend to just get clickbait by being anti-crypto. The reality is most people just don't care about crypto or they love it, right? There's no real enemies here, has tons of supporters. But, you can create enemies really fast if you start to apply other political issues to your crypto stance. So I think we all want a more fair regulatory approach for digital assets in Washington. And I think ultimately we're heading in that direction regardless. So that's great. With regard to the bankruptcy supply stuff, like I said, Thomas Brazil is supposed to join us. Hopefully we'll get him again next week. But there were a couple of things last week that were important with digital assets. And I think, overall, before we get into this, I think crypto investors get way too focused on supply and not enough on demand. Every market has supply, right? The new issue debt market has supply. Equity markets have supply with IPOs. Obviously, real estate market has supply. Most people really don't care about supply when there's real demand, right? Supply is just naturally part of the equation. And in fact, you need supply in many cases to fill that demand. But in crypto, because demand isn't always there, we tend to focus way too much on lockups and new issuance. And it's certainly more recently, these bankrupt estates and the liquidations of them. But last week, we learned a couple of things, right? One was, even though this is not new, the 9-year bankruptcy of Mt. Gox in Japan, with repayments worth around $10 billion. That we saw some wallets on the move last week. And again, this is not new information. This is very well telegraphed in the public eye. We know that those distributions are coming probably at the end of this year, maybe into January, February next year. Those are going to be in-kind distributions of Bitcoin and Bitcoin Cash. We've been on record saying that I think the market is probably overestimating how much of that Bitcoin is actually going to be sold. Don't forget, people who were caught up in Mt. Gox were true Bitcoin believers from, almost 10 years ago now. They're likely not just going to be selling Bitcoin the second they get it back. And even those who were buying it purely for financial reasons, like a lot of distress funds, for the most part have already hedged that out or even sold bilateral contracts forward. to sell that out. So probably not going to see as much Bitcoin supply from that as you'd expect, but I would imagine all of the Bitcoin Cash would be sold, because don't forget, the Bitcoin Cash fork in 2017 was 3 years after the bankruptcy of Mt. Gox. So pretty much everybody who's getting back Bitcoin Cash has no real incentive to keep it. They weren't necessarily Bitcoin Cash supporters. It was just sort of like a free dividend that they're going to get here. So I'd expect Bitcoin Cash to be under pressure. Minimal impact on Bitcoin. On the other side, we saw that Gemini distributed around $2.2 billion last week after finally getting through their bankruptcy process with Genesis. A watershed moment for bankruptcy, getting over 200% recovery in cash, but more importantly, the fact that it wasn't a cash distribution like Celsius and FTX. This was actually in kind. Hard to know whether or not some of those assets will be put back on the market right away. Again, people who are willing to own their crypto and stake it or lend it to Gemini through their Earn program, probably still pretty pro crypto. I'd imagine a lot of these people are just happy to get their Bitcoin and their ETH back and be able to hold on to it. But we'll see. I think, to me, that's a much bigger issue for the market from a supply standpoint, given that it was sort of unexpected, the amount that they got and how fast they're receiving it. And then finally, we're hearing that the cash settlement of the FTX estate, which is somewhere around the $14 to $16 billion range, will begin to be repaid next year. Don't forget, that's all in cash, right? That is a cash fiat distribution. So, as burned as a lot of people were in FTX, they're still getting 118% plus post-petition interest recovery. That's real money going back into their pockets. At least some of that will make its way back into the digital asset market. So I'd expect that to be sort of a boon to the market. So again, I would say that the supply side headwinds and tailwinds are probably interfering with just the regular, constructive digital asset market right now. But it is something to be important. It's something important to be aware of as these distributions happen. Ultimately, though, again, supply is a good thing if there's actual demand. If some of these projects start to create real demand for their projects as well as for their tokens, the supply just becomes so little of an issue relative to the amount of potential demand there is in the world. Finally, we touched again in the blog about the ETH ETF. I think all eyes will be on this for the next 2 to 8 weeks or so as the S1s are filed to see when and if these ETFs will actually start to go live. Most people are trying to figure out what this is actually going to mean from a market standpoint. I think the easiest guesstimate is just looking at what the Grayscale ETH product was relative to the Grayscale Bitcoin product. GBTC was about 4 times the size of ETH, which would indicate that ratio of 25% for ETH is probably something similar to what you'll see with the ETH ETF. So we know that $5 billion of inflows came into the Bitcoin ETFs in the first 30 days. I think something like 13 billion total over the first month and a half or 2 months. That would indicate somewhere around $1 billion to $2.5 billion of demand for the ETH ETF. I think the big challenge here is going to be how are these ETFs marketed. Again, for those who have been listening to us for a while and read our blog, we've been on record multiple times that we think the best way to pitch an Ethereum ETF is just to talk about it being an app store, right? We don't like the term ultrasound money or supercomputer or internet bond or all these other things people have concocted about what Ethereum is. In terms of just getting regular FAs and RIAs and regular investors to understand what Ethereum is, just calling it an app store is the one that's going to resonate the most, right? Because it is, right? A blockchain is just an app store that can have apps built inside of it. You can have your DeFi apps, your Maps apps, your gaming apps, etc. And that's an easy analogy for investors to understand. And the reality is, just about every investor cares about tech, right? Even those who maybe have missed the last 30 years of the tech revolution still understand how important tech is to a portfolio. Very few people really care about gold. I've been in finance now for almost 25 years. I've had maybe 4 conversations about gold in my life. It's just not something that most people care about. They know what it is, but it's not something that matters to most investors' portfolios. So I think if you pitch this correctly and you talk about it in terms of the technology, it being this app store, this revolutionary, growth engine, just like the Apple App Store and Android were, you're going to have a real easy time picking up new demand for the ETF. The other thing that's probably more important with this is just the structural supply of Bitcoin versus ETH. Bitcoin is still proof of work. It's run by miners who control the supply. That supply or inflation schedule is fixed. Everyone knows when it's coming. And as a result, the selling pressure is somewhat constant. And in order to offset constant selling pressure from the miners, you do need some sort of constant demand, which is what the ETF now provides for Bitcoin. Alternatively, Ethereum, now that it's proof of stake, there is no constant supply. And in fact, in some periods of real high economic activity on the blockchain, Ethereum can often be deflationary, meaning you're actually burning more ETH than there is in supply. As a result, if you have any net incremental demand for Ethereum without any increase in supply, that has a much greater chance of driving price a lot higher. So, I think Bitcoin went up about 75% upon the ETF announcement and subsequent flows. If you have anywhere close to a quarter of those flows into Ethereum, I think the price of Ethereum goes up way more than 75%, just as a result of that lack of supply that we talked about. So with that in mind, again, I think we have a pretty constructive market here across both equities and digital assets. We're looking at things like rates being stabilized, the equity market continuing to hit all-time highs. You had pretty favorable Fed speak last month with regard to no real concerns about stagflation, combined with the fact that you have this new demand driver in the Bitcoin ETF and soon to be the Ethereum ETF, combined with the fact that you have everything that's happening in Washington, which is undeniably positive developments with regard to future regulation in the U.S. It feels pretty good here in the digital asset market. And again, I think some of these other issues that are popping up are maybe more of a distraction than really something that you need to sink your teeth into when it comes to investing. So we'll keep an eye on the flows. We'll keep an eye on the supply. But ultimately, we think that there's just going to be a credible bottled up demand here heading into the end of the year. So again, we encourage everybody to check out the actual blog on our website, ar.ca/blog. Certainly reach out with any questions. Love to hear from you. And we'll be back again next week. So thanks for listening, everyone, and we'll see you next Tuesday.